Music Production.
Yo, what's poppin'? Let's get into this. We're going to break down the NASDAQ and the S&P and just talk about the overall market and likelihoods of us going lower here. So it's interesting, man. When you pull up like the 2008 NASDAQ chart, which we will, and we pull up the 2022, there's some crazy similarities. It's super interesting. So I want to start off with just the technical analysis, and as we go along, we're going to get down to some fundamentals on what could cause this market to pretty much drop further. So we still haven't broken over this major trend line here, right? This trend line has been our bear market trend line. I think that it'll be pretty significant once we break up over that in the future. So I'm going to keep this drawn out, right, for a long time here. Now, I don't know how long it's going to go for. None of us do. But I think that a break of this trend line with significant volume and, market sentiment switch up would signify the end of a bear market. Now, here's the thing, right? We have 1, 2, 3, 4 clean touches here. This is the weekly time frame. Now, what could possibly bring us lower? Well, there's quite a few different bearish catalysts that we could think of, right? We all know Russia-Ukraine is just, I don't know too much about the details of it, but we know that there's a goddamn war going on, and if nukes go, what do you think's gonna happen in the market? Everyone's gonna be scared shitless, and they're going to want to take all their money out of assets and have cash for whatever reasons: food, shelter, gas, all the basic living essential needs, right? So that's just one of them, right? We also have inflation, right? There's pretty much, from what I've been reading into and listening to on podcasts, there's no sign of inflation really slowing down anytime soon. This might be a long period of inflation that we haven't seen in over half a century, I believe. It's the largest amount of inflation that we've had in half a century or something crazy like that. So that's a major catalyst, right? You got to think about, it's now costing a lot more to just live, right? To eat, to have shelter over your head. Everything's costing more. Gas is more expensive than it was back a couple of years ago. Now, COVID, of course, has shit to do with that, right? But even still, inflation is a major thing here that's going to affect people from investing in the markets because they need that money to live, right? That's just the basic shit, right? We also have the interest rates rising, okay? So these interest rates, we're not going to see an effect until probably late next year of how this is really going to affect people, right? So people who were paying $2,000 a month for their mortgage, that's significantly higher now, right? You got to think about that. That money that people did have left over would have went into assets or into other properties or into other investments, etc. That's now being used just for the payment of their houses, right? So there's less money being put into the markets, right? That's something that we have to be aware of right now, which is think of it that in order for numbers to go higher, there has to be people buying stock and pushing demand up, right? But right now we're seeing an influx of supply. People are selling. Not many people want to be buying at prices that they are right now. So when there's more supply, people selling, than there is demand, people buying, the price will go lower, right? We also have to take into consideration that debt, retail debt, is the highest it's been in a long time, right? Majority of people, if you look at the statistics, are in debt in the States. I'm not too sure about Canada. A lot of the statistics I look at are from the US, but you can kind of correlate it in some sort of sense. Debt is rising. So think of this. If the debt continues to rise, and say the interest on that debt also continues to rise, people are going to start selling off the assets that they do have just to pay that the debt off. That could cause a further collapse in the markets, right? Like if people are selling a bunch of their Apple shares, a bunch of their whatever, their market shares, so that they could pay off the debts, you're selling off the assets. It's going to cause the prices to go lower, right? Now we also got to think about pension funds and just institutional investors, trying to like make their tax losses at the end of the year situated. They're trying to get all that shit situated. So if you think about it, like there could be a larger influx coming in the next few weeks of people selling their assets before the end of the year. Not just people, but institutions, right? Institutions have a lot more money than the average retail investor. So these are just a few catalysts, right? These are just a few basic catalysts that could get this price to drop lower, right? We did have a pretty decent rally from like October up until now, right? It brought us right back up into this trend line. And then we get this massive bearish engulfing that covers 1, 2, 3, 4 weeks, right? That's signaling that we're going to continue this downtrend, right? It's a longer term downtrend. This might have been a small uptrend here, right? These three moves right here might have been small uptrends, but overall, if you're looking at this chart, the greater picture here, the bigger picture is a longer period downtrend. So what we're looking for is, I'm pretty sure this is going to continue with all this bearish catalyst going on. How far are we going to go, right? How far? This is the question. This is the question here. So we have the NASDAQ here. We're on the weekly time frame. No one knows how far we're going to go. But I think that if you look at this in a positive way and you're thinking, I'm only investing what I'm willing to lose, when this bottom comes, it's going to give us a crazy opportunity for long-term investors, right? We might not get that COVID crash bounce, right? It's not going to be like this. There's no way. There is no way that we're going to flush down and get a massive rally after that for 2 years. It's going to look similar to 2008. So I'm going to pull that up here. But at first, we're going to point out some of the similarities. So we got 1, 2, 3, 4 major touches here on this trend line. That's holding us back, right? Now, I think the significance of this past week, this massive bearish engulfing here, I think that this is signaling that we're about to drop. Like we're about to go lower for sure, like a lot lower. I don't know how much lower, but this is what we're looking at. We've been down to this level. We could get that double bottom, potentially get that rally if all this stuff starts to turn around, right? What happens if they start to like pause the inflation hikes, right? Instead of increasing it, they keep it flat, right? That could be a reason that the markets would increase. But if all the bearish catalysts persist, like I say, we'd be looking at this top level here. This is back at the top of 2020. So no, sorry, the early 2020. This is right before the COVID dump. We could come revisit those levels, right? That would be another 12-13% from here. I don't really think that that's that big, right? If you're talking about what's going on in retrospect, we have a 42% drawdown. When we look at the NASDAQ back in 2008, let's see if we could pull that up, right? NASDAQ 2008 here, we got some similarities. 1, around 2, 3, 4 touches, right? Then we get this massive flush. It brings us down to previous support levels that were back a few years ago, sure. But if we're looking at a percentage drop, right, from top to bottom of this 2008 crash, it's 53-54%, right, before we reached a bottom. And then even that, for that bottom to fully develop, it took several weeks. So what we could be looking at, right, I'm not saying we're going to drop all the way down 50-something% from the highs, because if so, that would bring us down to pretty much the bottom of the COVID crash. Now, wouldn't that be interesting if we completely retrace those levels and we came back all the way down to here? Is it possible? Of course it's possible. We can't just rule that out. It'd be pretty ignorant to just rule that out. So my plan here is to be patient, and I'm going to be gathering at this level. If we come down to the 9,600 level, I'll be looking at stocks I like to gather, cryptocurrencies I like to gather, and crypto related stocks that I like to gather. So right now I'm paying a high attention to Amazon, Shopify, Apple, right? Those are just mainstream blue chip stocks. In terms of cryptocurrency, I'll be looking at Bitcoin and Ethereum, and that's pretty much it. But the crypto related stocks, I'll be looking at WonderFi, Galaxy, Hut 8, and Hive. So those are the names I'm looking at when I see the markets come to these levels. It's going to be a scary time in the markets. We're going to hear a lot of bad news, blood in the streets in terms of lots of red on the charts. It's not going to be pretty, but these are what I'm watching for. If we come anywhere into this zone between 9,500 and 7,100, it's going to be a buy opportunity for long term, in my opinion. So now when we look at the S&P, it's very similar, very similar. We still have this trend line that's been holding us back. The only difference that I see on the S&P is that we've essentially almost come back to the beginning of 2020 before the COVID drop, right? We've pretty much just about almost hit that level already. So we could, that's really not that far off, is what I'm trying to say. But if we go all the way back down to that, now that's a big drop on the S&P for sure. It's another 36% down. Again, I do think that it's evident, right? They're going to print money at some point. It's just not going to be the same as 2020, where they print like trillions of dollars. I do think there will be monetary easing, but at a way slower pace, right? They're going to make it way harder for us to make these gains like this, right? It's going to be a lot harder, which is why when we go back to like the NASDAQ and you see how long it took after 2008 to really develop a bottom, right? Like over here, if you look, 57% drawdown on the S&P, it took several months and weeks to gain that bottom, right? It took a long time. It's going to be the same thing here, because all in all, it's a financial crisis that's going on, in my opinion, and along with a lot of other macroeconomic bullshit. So that's me breaking down the markets. I just thought I'd bring this stuff up because just as bullish as I am, regardless I'm a bullish guy. Like that's my style and my personality. I'm always looking for a long opportunity, right? It doesn't mean we have to ignore the bearish like sentiment that's on right now and the opportunity for the downside. We can't ignore that. What I'm trying to say is it's good that this is happening to create a new balance and to create those opportunities for the bulls, because those who are gathering when we get down to here, get down to these levels, if it comes down, those are the ones who are going to be like, damn, I can't believe I was nutty enough to invest because I was putting in the work to understand this shit. So that's the breakdown here. We're potentially looking at a market crash coming up soon. I hope it doesn't happen, but let's hope some of these bearish catalysts turn around so that it isn't as heavy as a blow this time around compared to 2008. That's the breakdown here. Peace, guys.